Hey guys, in today's video, I've got some brand new trading opportunities for you to take a look at. I've got an update on the DKC strategy, and I've got some pretty cool news to announce. So let's start off on the Euro Dollar daily chart. And by the way, for you guys that ask in the videos, I am using the TradingView platform. If you ever see a blue background, this is TradingView. Whenever you see the black background, that is NinjaTrader. I bounce between both platforms. By the way, massive honor this week. I was elected into the inaugural class of TradingView Wizards, which is awesome. One of you guys gave me the heads up, then I got the email from TradingView of the honor, and it's pretty cool. Cool to be honored. You know, I don't really like a lot of that stuff. I try to stay as low key as possible, but it just proves that consistent work over a consistent period of time and doing things the right way for the right reasons pays off. And it's cool to see that people respect that without the kind of flashiness and braggadocious stuff that you see from a lot of people on these platforms. So I appreciate all you guys that played a part in that. Euro dollar. So what we recently did was, and by recently over the last few weeks or so, we've put in a higher high, higher close of our recent level of structure. Now we are at a previous level of consolidation here, but if you remember, we are looking for a move that can potentially go to the top of that range. So there is move to the upside. When we go down to the 4-hour time frame here, you're going to see that we spent the entire week essentially in consolidation, this zone right here. And this is a consolidation pattern that can break out either way. I do have a slight bias to the upside just based on our higher time frame analysis, but we can certainly move in both directions here. So what I want to do is two things. I want to measure out my two decision points, so the two levels of structure that are important for me, and then the two next levels of structure that are important for me as far as my prediction goes. So when I look at this pattern right here, I look at the top level of structure right here, and I look at the bottom level of structure right here, and I'll draw this bottom one in two ways. I am personally a horizontal support and resistance trader, trend line trader, so I look for horizontal support and resistance. But if you want to throw a trend line here as well, you can look at connecting the dots with these lows here too, and using this as a level of structure. The point is, these are the levels that need to be violated. And if either of these levels are violated, then I know which way I want to involve myself in the market. Now, the next question is, right, if price is going to go up or down, then where are we likely to go to? Where that's where I would use my VS1 levels if I'm over on NinjaTrader, or just my ability to identify structure here on TradingView and identify our next level of structure resistance to the upside and our previous level of structure support to the downside. And I know that if price were to violate one of these levels, the top level, then we would look for a move up here. The bottom level, whether it's your trend line right here or your horizontal support and resistance line, then we're likely to move down there. So that's what's going to be on my radar for the week ahead. Again, the bias right now is to the upside just because of the overall trend and just because of the story that these candlestick wicks are giving me. But we always want to be predictive in our analysis and reactive in our execution. So keep an eye on this next week. Next up, we're heading over to the Australian dollar, and you can see consolidation on your chart. It's kind of been the theme of this week in the markets, but as we know, consolidation leads to advanced pattern formations. If you guys didn't get a chance to do so, I just put out a podcast, I believe this Friday, talking about a quote that changed my trading life forever. It was basically, the advance is nothing more than a mastery of the basics. And I told the story of how I kind of went backwards. I started with advanced pattern formations because I needed something very strict, very black or white that I can trade and identify and start making money. And then I kind of went back to the basics. And, you know, I bounced back and forth between talking about pattern formations, advanced pattern formations, harmonic pattern formations, and then your classic pattern formations in the market. But they both play a role in my trading, and being knowledgeable and having the ability to execute both gives me opportunities to be dangerous in directional moving markets and in consolidative markets. So I don't talk about them as much as I used to, but they are still a staple of my trading plan. It's funny when you don't mention it on YouTube for a few weeks, people think that you ditched them and moved on to another magic strategy. No, they're just, they don't need to be talked about every week. Anyway, what does need to be talked about is the advanced pattern formation that is here on, a potential one that is here on Aussie dollar. We have a potential gartly forming, right? I'll draw out my fibs and I'll measure it out for you. We're going to start with our swing low to swing high, our anchor leg right here being our X to A. This first retracement right here is going to be our A to B. We got a nice little complex pullback in here. So a little AB equals CD pattern. I'll draw it in. Doesn't really matter too much, but a complex pullback here. And that move is going to be our B to C. And then our move down here to, looks like right above the 886. Let me bring in a Fibonacci extension from my A leg to my B leg and back up. Boom, right around that area. That is going to be our 127 Fibonacci extension, which marks the D completion area for how I trade the Gartley pattern. There's different ways to trade it out there. I recommend trying a few of them out and seeing which one fits your personality and your appetite the most. But the 127 extension is how I personally trade it. And again, that's something that I've evolved over the years from another way that just wasn't as consistent. So if price action were to come down into this area, you have a potential buy on our radar. Aussie dollar, 4-hour potential bullish Gartley. So in the last video, I mentioned that consolidation breeds advanced pattern formations. Well, the euro pound, which is by nature a very slow and consolidative pair, is a perfect example of this, because over the last few weeks or so, we've had a handful of advanced pattern formation. I'll draw them out roughly here, but the ones I remember, and I'm probably going to miss a few, are this one right here, X to A to B, B to C, and then a CD up here for a cipher. We got a smaller one as well this week, X to A to B, B to C, C to D right here for another cipher completion. And now we are putting in another potential pattern formation. I'm going to bump up to the daily real quick. That way you can get a clearer view and go ahead and erase this stuff. Some of you can probably see a third one forming, right, that we spoke about. Ooh, hold on, there may be one I missed here. Let me see. Did we hit the... You can tell these things aren't rehearsed. Did we hit the 618? Just missed. I thought we had one sitting in here. Ignore that weird goat sounding noise I made. That's my trader brain speaking. But just missed one there as well. And the bigger one I was referring to real quick, guys, is X to A to B, B to C, C to D. Right? I think we spoke about that last week. But let's talk about this smaller one here before I get even more distracted. If we look at our starting point being down here, this swing low to swing high is going to be our anchor leg. You can see that we come down to test the 50% retracement. Hitting the 50% retracement puts us on alert for a very specific pattern formation. This is going to be the bat pattern. We have another retracement right here. And if price action were to spike down to the 886, we're going to have our D completion point and zone for a bullish bat pattern. So again, in the previous one, the 618 was the level that was hit that put us on alert for a Gartley. In this example, the 50%, that was the level that was hit that puts us on alert for a bat. By the way, if you haven't done so already, I put out an amazing video, right? You know it's good if I call it amazing, right? Because usually I don't give myself enough credit. But amazing video. We were having a discussion in the live room this week about different pattern formations and the psychology behind why they form. And we're talking about the 5-0 pattern specifically and how I really like the story that pattern represents. If you want to get a sense of the story behind patterns and understand that they're just not this kind of randomness that happens in the market, there's actually a rhyme and a reason behind them. After you're done this video, make sure you go back and watch that video. I think it's called How Price Moves or How Patterns Move. I don't remember what I call them. Give me 1 second. I'll just load it back up. Ooh, Arsenal and Southampton 3-3. That's interesting. It's called How to Read. Learn how and why price and markets move. That's a horrible sentence, but learn how and why price and markets move. You'll never look at a chart the same way after this. Really cool run through, a lot of good feedback on that video, so make sure you check it out. Price action psychology, you guys love that stuff. Before I let you guys go, I want to keep you updated on the DKC. If you guys are brand new, the DKC is a strategy that I started trading in April, started trading live in April, and I want to give you guys a week-to-week look at how it's doing because, again, as a trader, I think it's important to kind of see the story of what trading actually looks like. Before I got into all this teaching stuff, I had a blog called, what was it called? It was called Good Vibes, and it was called RatioTradingMentor.com. And what I did was I basically journaled and diaried about my trading journal and our journey. And so many people found it to be beneficial because it wasn't what you saw on the internet. The internet typically shows you all the great stuff and all the fun stuff. I was showing you the pain because I was really bad at the time. So I always like doing that with trading as well, just so you get a real feel. And week 1 started off good for the DKC. Week 2 was in a drawdown. Week 3, we continue that drawdown, right? 9 trades only hit at 22%, lost about 2% for the week. Year-to-date total, and again, year-to-date being April 3rd, that puts us at about a 31% win rate, which is slightly lower than what's expected. Expected is about 35, maybe 40 at the max. I should say 35 to 38. But we're down 2.4% for the year. So remember, we knew this when we got into it. It was a very profitable strategy, but the negative was that it had a low win percentage and it had really long losing streaks. And for me personally, who my trading aside from this is generally between 45 and 55% when it comes to accuracy, this was a new kind of challenge. I told myself I would never trade anything below 40% because I didn't think I can mentally and psychologically handle it. And this is a chance to test that. So it is a growth experience for me. I believe that when you put yourself in stressful situations and you put yourself in situations where you can kind of experience pain, you grow from it and you become better on the other side. I learned that lesson from sports and years of destroying my body and lifting weights and failing and coming back stronger, and also years of trading as well. So we're not worried about it at all. We're not even a month in. We're thinking big picture, but it is cool to kind of absorb this pain and see how it's going to allow us to grow and become better, bigger picture. So I'll keep you guys updated. The good, the bad, the ugly, the beautiful, as always. Now, one last announcement. I am making some changes to the Trading Coach podcast. If you guys remember, we started off the podcast with 2 episodes a week. We graduated to 3 episodes a week. And now by popular request, we are going 5 episodes a week. So brand new Trading Coach podcast episodes Monday through Friday. I'm going to try my best to keep them short and sweet. I know how attention spans work, but it has been demanded, so I shall give you the supply. So check it out on your favorite podcasting app. Make sure you subscribe. That way you don't miss the next episode. And of course, if you haven't done so already, leave me a rating, leave me a review. That's the best way we can grow the podcast. I'm ranked number 7 right now. And, well, this trading wizard would like to be ranked number 1. So help a brother out. All right. Until next time, plan your trade your plan. Help me with getting Everton out of the relegation zone as well. And I'll see you guys next week.